What is going on, Future Focus Nation? My name is George, and we talk about finance and investing in this channel. And today, we got something a little bit different. Every so often, I like to bring in people that are part of the chat from all over the world. They have different perspectives on what's going on in the market. Today, we're just going to do a what are your thoughts? We're going to talk about a lot of the craziness that happened during this week. I'm going to pull up some charts so we can look at them. Remember, invest in me and press that like button, invest in yourself, and smash that subscribe button. With all that said, let's get right into it. So if you've been watching during this week, you know what's been going on with Gamestop, the massive run that we had in AMC, and even at the end of the week, we had Dogecoin trying to fly up to the moon. You even had Larry over here trying to start up a Robinhood account with the quickness, trying to put 500 in there, trying to get on that run up. I've been trying to talk him out of it the whole time. He's been calling me a hater, but I'm just trying to protect him. And if he would have been able to invest that money in there when it was about 7 cents, since then, it's dropped to about 2 cents and steady around 3 cents. So with all that going on and all the craziness that you guys have been watching, my first question that I'm going to pose to you guys is this the end of value investing? Do you guys think this is the end of being a value investor?
It just depends on how far it goes, I guess. Because I've had people message me and they say Monday they're going all in on GameStop and AMC. So we'll see. And then the Dogecoin, or however you say it, it's still pretty big on social media, but it looks like everybody's, pulling out because like you said, it went all the way up to what, 7 something, and now it's down to like 2 within like a day. So I don't know. I think the next 2 weeks, and then whatever happens as far as like the SEC investigating and stuff, is Robinhood still only allowing like one share of GameStop at a time or something like that. So we'll see what happens.
I don't know, man. I think like that's a very interesting question. The way that I see it is that like once we need to understand sort of like what type of economic system we're dealing with, right? And the type of economic system that we're dealing with is an economic system that's constantly looking for new markets, right? And when we look historically, the way trades used to happen in the past is that the stock market was reserved for people who essentially had a ton of money on reserve that they can invest and play around with and gamble, right? And then over time, that market was small in terms of its ambition and its ability to continue expanding, right? So new platforms started to emerge, like Robinhood, like M1 Finance, like Ally, and all these different platforms that allowed everyday lay people to just like invest their money, their hard-earned money into the stock market, right? And some people were able to make a pretty good living off of it, right? But also, what we saw in the most recent thing is that there was a weakness in that process, right? Is when you open up the markets into that people can actually get to a point where they can organize and actually like create some sort of disruption into a market that is stable and potentially dangerous for people who are investing millions or billions of dollars into this market, right? So I don't think it's an end to the way people are trading, but I think there are some like new regulations that will be coming our way, right? In terms of like maybe monitoring more closely what is happening on these like social forums, what is happening on these like platforms where people are exchanging ideas on like what to invest in, right? So there might be some more regulation on that aspect, but in terms of like the market shrinking, I don't see that happening, right? It's not beneficial for people who are making a ton of money off of it.
Well, that's kind of already happened. So you already saw it ran up all the way to 500. And if it's ran up to 500, it's not just because of no reason, it means that people are actually paying that price at that time. So as of right now, there are already a lot of people who lost money. Another thing that you have to consider is that a lot of people are like, yeah, we got to get these hedge funds. We got to break down these hedge funds. But at the end of the day, the hedge funds are not going to lose because you already saw this huge conglomerate called Citadel. They already bailed out that hedge fund. So that hedge fund is not going to lose. But you know who does lose? The police funds, the pension funds from the police, the pension funds from nurses, the pension funds from teachers. Like are these institutions are all invested inside of these hedge funds. So when anything happens and they lose money, these are the ones who lose money. I'm not sure if you guys are familiar with the show Billions, But in season one, that's one of the things that happens. Like the hedge fund, they get a bad reputation because they did something kind of sketchy, and then the CEO of the hedge fund, has a sit down with the person that's in charge of the police pension fund, and the guy's like, I can't do it, man. I can't put myself on the line and be invested in your pension fund anymore. I mean, in your hedge fund anymore. So it's kind of already happening. So what's going to happen is a lot of those people are going to pull out their money out of the hedge funds, and then they're going to say, I'm going to invest myself. And some people, like, I've already seen it. A lot of people. Let me let Matt in. So, hey, Matt, welcome. The question that I posed was, they've already answered, but the question that I posed to everybody was, is this the end of value investing with what you see in the market? And I'm not talking about you, because I know it's not the end of it for you, but what you see in the market, do you think this is the end of value investing?
I would stay away from that, man. And the reason being, people thought that it was the end of value investing in the 1929, 1930s. And I'm not here just saying that. Like, when you read old books from Dodd and Benjamin Graham, I saw an excerpt, and basically they were saying that people gave up on earnings and traded it in for future growth. And it just never ends well, man. I listen, I think you can make a lot of money doing that. But when the music stops, that's the question. And I just want to make this clear. There's things that the Fed cannot bail out. There's things bigger than the stock market the Fed cannot bail out. Fed is not, they are Superman. Yeah, I give you that. But every Superman has a kryptonite. And that might be the bond market. All right. Like, I'm telling you, not trying to speak fear or anything, but let's talk about worst case scenario. I've seen when the Bank of Japan bought the bulk of the market share in the Nikkei, and there were just no traders on the other side. Until this day, most of the ETFs in Japan are owned by the Bank of Japanese government. So you just gotta be careful. Make your money. Listen, make your money. Make your money, but you gotta think. You just have to think when the Fed may not cooperate. I don't think any business strategy should be dependent on one person saying, I'm going to buy your stuff, because what happens if they stop? American businesses run on American civilians at some point. We may live in la la land, but I've never heard of anything too good to be true lasting forever. That's all I got to say.
Hey, Matt, that's a great point. As I told you guys before, like, I call Matt the pessimist, but not putting in the market has never lost anybody money. You know what I mean? So if they may have lost it through inflation, but they haven't personally lost it through what some people call gambling. The reason I pose this question is at the end of the value investor is because I've seen the shift. I've seen a lot of money come out of the ETFs, like the S&P 500 ETF, SPY, VOO. I've seen the heavy volume come out of those. And obviously that money is not going into the bond market yet, like he alluded to, because as of right now, the bond market is a risk asset because it's not making you any money back. You know what I mean? You're not even keeping up with inflation. Will that change? It might. I mean, we've seen the treasury yield rise in the last 6 months. I think it's gone up about 4 or 5 basis points. It may have gone up more, but we've seen that transition. And what I'm going to do right now is I'm going to pull up a chart of the S&P 500 so we could see what it's been doing in the last 3 months, so we can try to get a better understanding. All right, so we'll go back. We'll look at what it's done this year. As you see, the S&P 500 has been on an uptrend throughout this entire year. But like I was saying, we're overdue for a correction. We'll look at the 3-month again, and the 3-month, we're seeing those still a little bit of uptrend, but we're slowing down. As you see here, we were going, kind of at a 45-degree angle, Now we're kind of skating back down. I called the resistance level currently at 36.96. That's just where it keeps bouncing off of. It was a good sign of resistance right here for all this time frame. And now, as you can see, it's bounced back down to that. So if it breaks that, like I said, I can see it going down here to the 3,607 mark, simply because it served as support here. It served as support here. It served as resistance here. It served as resistance here. And it was kind of consistent. If we fall below that, the next one would be right here in this general area, which is 3546. And that was kind of a consolidation on the way up as well. We'll look at the 5-day one more time. And in the last 5 days, we're seeing those lower lows and lower highs. So this shows bearish sentiment right here. So the reason I'm showing you guys the charts, I use that chart not to tell me if other stocks are going to go up or stocks are going to go down. When I look at that S&P 500 chart, all I'm trying to get out of it is I'm trying to look at the sentiment of the overall investor. But you could look at this two ways. You could look at this as the people are selling out of the stocks in the S&P 500 in order to put it into, those Gamestop or AMC, because while those stocks were going up over 300%, you could see that the overall market as a whole fell about 5% this week. So what do you guys think about the way sentiment is from your perspective?
I think I think sentiment is fickle, man. People are not investing because they believe in the economy. They're investing because what big government is doing and how well it's being propped up. So as long as they're on board, everybody else is on board. And when that stops, everything else stops. There is no real true production or productivity. I was even gonna make the argument and saying it's coming back. I don't even know we bottomed out yet. And again, you called me a pessimist. Listen, when I invest, I'm a realist. I'm a realist. I don't tell me a sweet story. That's not gonna help me. Give me the real. Lay it down. Give me the real, and I know how to proceed. I can make money in a bad market. I could make money in a good market. I could make money when the market's trading sideways. But I need people to be real with me. I don't know. I've looked at studies in history. This experiment hasn't gone too well. Yeah, I could name different eras where they've tried this. I want to, what's his name? John Law of France. He was the I don't think he was the he'd probably be equivalent to what Jerome Powell is now. I think he was like the minister of finance, and his thing was to print money, and nobody asked to like trade that money in for a hard commodity until one day they did. So I think my big takeaway is, if you haven't noticed, this market can swing at the drop of a dime. News comes in so fast. It's mind-boggling how fast news comes. I feel like I'm on it 24/7 and I still can't keep up sometimes. It's coming in fast. So to trade with complacency is crazy to me. I don't know if you're interested. This will be the last thing I'll say. I don't know if you're interested, but I have all the data points of the Dow Jones from 1914 till today. And I went back well before this, well before coronavirus. I went back and studied each recession and depression. And I looked at the trough to peak, or the peak to trough, and then back to the break even. I did that from 1914 all the way to modern day. I could give it to you. I have it in Excel. I highlighted it. I'm the one in 1987 and the one in 2020. When we had less than a month rebound, those are anomalies. Those are anomalies. So this is my conclusion. Either history is going to repeat, or Jerome Powell is the best to ever do it. You know, so that it is possible. He might be the greatest mind of this generation. But you know, I like to hedge on probability. But honestly, it doesn't even matter to me, because there's certain plays now that if the market goes up or down, you're guaranteed to make money. You know, so I'm not rooting for the market to crash. All I want is a connection between our economy and the market. That's all. And then that way, that guarantees everybody participation. Yeah, you can't participate if the economy is doing what bad and the markets do. That just creates inequality, and then you're gonna get even more protests. But all right, I'm done.
Yeah, I mean, just to jump on that too. I mean, like, my whole thing is like, my whole questioning during this entire thing is like, are we in a bubble, and like, when is it gonna burst? You know, like, when you start looking at the economy right now, like the stock market has been doing great during this pandemic, but in terms of like the economy, in terms of material reality, it's not that great, right? Like we've been breaking almost every record every week in terms of the amount of people that are signing up for unemployment benefits, right? Like people are losing their jobs in a ridiculous a way. So in many ways, like I'm wondering if the market is doing so great, like where's this capital actually coming from, right? Because people aren't spending money as they were during that like small bump of increase in the economy that we were getting, right? Like this false sense of stability that we were getting in the United States. Like, so I'm wondering, like, is there to some extent a lag in terms of like what is really happening in actuality for actual Americans, and what is actually happening in the stock market, and whether or not those two things are disconnected, and at what point do those things actually meet, and do they connect to reality, right? Because it has to happen. Right? At some point, like those two things need to happen, and then the market's going to be reflective on it. As people who are trying to invest in the market, like how are you able to understand that and ways that you can capitalize on it? And I think like I personally haven't figured that out. I'm still like trying to figure that out. Like what companies are going to do great in a struggling economy, regardless of the unemployment rates that we're facing in the United States. What companies are going to jump up with this new administration? I think that's the challenge.
At this point, like if it is a bubble and when it pops, once that happens, it doesn't matter if companies are doing great or not doing great. For example, this it's been earnings season for the last few weeks. And what we've seen is a lot of companies have reported some positive earnings. Tesla broke their own record for vehicle sales. Apple reported some outstanding numbers that even surprised, their big investors. And both of those companies, they both went down on earnings announcements. And that's kind of the opposite of what's supposed to happen. A lot of things are opposite right now. Every week since, August, we've been very paying, even before that, but in this channel since August, we've been paying a lot of attention to those unemployment numbers, the numbers you're talking about, the weekly unemployment numbers. And there's fake numbers and real numbers, and we've been looking at both of those numbers. And by fake, we're just saying the numbers that are supposed to be announced. And if you go to my usdebtclock.org, you can actually see the real numbers on there. But if you take a close look at that, you could see that every week it's been worse and worse and worse, and the market's been going up and up and up. So there hasn't been that correlation that you're talking about there. What do you think, Larry?
No, I'm just curious. Like, I get what everyone's saying, but you also got to look at it from perspective too. That I know it's not a majority, but how many people are not going back to work because unemployment is so great? I mean, that's a serious question. Because at first they were getting paid more than they did at work, so why would they go back? You know what I mean? So I think there's a lot of perspective to look at it from. And like you said, a bunch of the companies are reporting good earnings from last quarter. So it's either it's happening or somebody's giving false numbers. But it will be interesting to see what happens.
And on the other side of what Carlos was alluding to, when he was talking about, where's this money coming from? Um, a lot of people, just like a lot of businesses have been closed, there's people that still been working. Like the gig economy has still been operational, and a lot of those people that work in the gig economy, they haven't had a place to, put their money because a lot of places are closed. So a lot of those people are taking their money and throwing it in the stock market. Even though the stock market is at all-time highs right now, well, we've kind of come down from the all-time high, but like there's still a lot of money inside of brokerages that is not being used yet. So there's about the most ever, which is about $2.5 trillion just sitting on the sideline waiting to be thrown in. A lot of people are waiting for that stock market to fall or crash in order for them to put that money in. Uh, you got something to say, Matt?
Um, so what does that tell you, right? Let's talk about body language. I think we're too visceral. I think we look at too much of what the index are doing. That's just the icing on the cake. There, that doesn't mean anything. The bond market is the cake itself, but nonetheless, money on the sidelines. What does that tell you?
Well, I'll answer it. Seeing the money on the sidelines is kind of the same thing I'm doing. I mean, I don't have everything in there. Like I told you guys, I keep, anywhere depending on what I'm investing on, I keep between 10 and 30% inside the brokerage, just sitting on cash, just 10 to 30%. No matter if I have 100,000 in there, I'm either gonna have between 10,000 or 30,000 just sitting on the sideline, not invested in anything, waiting for you know an opportunity that I like, or waiting for like if the market did crash, I wouldn't be fully invested because I like to think of if the market does fall today, every single stock I own fell 50%, how would I be? Like, how would I be making out? My brother is over here. He's just joining us. He looks like the Grim Reaper. Um, but how would my portfolio look if it all fell 50%? Because we saw that in March, like everything fell. If you owned gold, that fell. If you owned Bitcoin, that crashed from 18,000 all the way. I think it was about 12,000, but it crashed all the way down to $3,000. The price of gold fell. The price of silver fell. Everything fell because people were trying to run to cash because they didn't know what to expect or what was going to come next with the pandemic. Um, so if that were to happen again, how would I be situated?
I just want to caveat and say this. That is true, and when the last market crashed, the same things happened. But I this is my thing. We just can't gloss over the fact that there's a paper market in silver and there's a physical market, and nobody was out. At least according to a lot of the dealers, nobody was out getting rid of silver. So the ETF traders, yeah, they sold out to find cash positions, but nobody actually sold the real thing. And why would you, right? Like I have an asset that can be traded in any currency. I Why would I trade it for a paper asset that's declining in value? And what they're doing is they're trading in paper assets for paper assets. The value. The craziest thing is, and when the market dropped in gold and silver, I tried to buy more. I couldn't because the premiums never dropped for the physical. The price it virtually stayed the same. So people are not selling physical assets, specifically monetary physical assets, when the market drops. That's the paper assets that they sell.
Yeah, so what he's referring to is what's called derivatives. It's not really the. It says it's like a paper saying I have silver, which is like the ETF. If you invest in a gold ETF or a silver ETF, the way it's supposed to work is you put your money in, and these people go and they, the people that run the ETF, they go and they buy the actual physical asset. They put it into storage for you, and you're holding it. But if we went and we tried to let's say we all of us owned the gold ETF, and shit was coming to an end. You know, we're like, damn, we need to get our physical gold. If we all went to these people that are holding our like physical gold, and we all turned our paper in to get that gold back, there wouldn't be enough gold to pay us all back. So that's what it means by derivatives. Like the derivatives market is very dangerous. Um, it there's not enough to pay us all back. Same thing with the S&P 500. Same thing with um, those all those ETFs. If everybody pulled their money out at the same time, like there wouldn't be enough money to pay everybody back, especially since the price of it, as everybody was trying to pull out, the price of it would be plummeting as well. So that's that's the same thing that happened with GameStop. So you had all these people that had their hedge, which was, I'm going to put a short on it because they knew bad news was coming, and they did all these shorts. Um, and all these people did was they bought it and they didn't sell. All these people just didn't sell. So that's the way the prices are made. Do you guys know how prices are made in the stock market? Like what makes this stock a certain price? Like, do you guys know how that works? All right. So the reason any stock is the price that it is because that's the price either somebody is willing to sell it for or somebody is willing to buy it for. So that's what the price is based off. And it's not just one person, it's based on volume. So how many people or how much of that share or how many shares are somebody willing to sell at like $300, which the GameStop flew to $300 quickly. So a lot of people put $300 for that's what they were willing to buy it for, and nobody was willing to sell. Like there was nobody selling it, um, or the amount of people selling it would drop down a lot. So that's what made the stock skyrocket so much, and that's why when Tesla rose the first time from 300 to 900, I wasn't trying to mess with it because I knew it would fall, and it did. It fell from 900 to like 600, and then from 600 when in March, it fell all the way down to 300 because it wasn't real. Like people were amping that up and making it go up. Um, Another thing that people don't realize is that the way it's in the media is it's retail versus hedge funds. So when they say retail, people just think people like us, like not millionaires, just people, with regular size bank accounts or average size bank accounts. But a retail investor is just anybody that's not a hedge fund or anybody that's not in a fund. So, you can have a retail investor that has $1 billion, and that person, those type of people were inside of this chat as well, trying to profit. Another thing that happened was that retail was screwing the hedge funds even worse than what was publicized. So like as the stock went up, what happened was that these hedge funds, they borrowed these shares. They didn't have them, they borrowed them. So at every dollar that it went up, these hedge funds have to do something that's called covering. So they have to cover themselves. By what they have to do is they have to buy the actual asset because they have to pay back these people that they borrowed those options from. So now they thought it was going to go down. They're already losing, and now they got to buy it higher. What retail started doing then is they started shorting the stock from that point. That's why it fell from 500 all the way back down to 250, because retail flipped it again and was screwing them on the way down. So now they're buying long calls and buying the actual asset at like $400, $500. And retail is saying, nope, we're going to get you on that as well. And they started buying shorts. So when the stock fell, a lot of the retail investors made money on that 500 to 250 price range as well. But the hedge funds did it too. So hedge funds jumped in, and Citadel did that. They jumped in when they knew that Robinhood put the limits on what you can buy and sell. Citadel put shorts on the stock when it was at 500. So Citadel made a lot of money when it dropped down to 200. Go ahead, Matt.
Do you consider that market manipulation?
Uh, it is. I mean, especially since there is a relationship between Citadel and Robinhood. For those of you who don't know, Robinhood is going public this year. And when a company goes public, they can't just go public by themselves. You have people that invest in that company, even with SPACs. You have people that are putting money into this SPAC in order to make it happen. So Robinhood is going to go public. Robinhood is they position themselves where the way they make money is not the same way that Charles Schwab makes money or Morgan Stanley makes money. Morgan Stanley and Charles Schwab, they make money from a lot of different things. They're very diversified. They make money from all these little companies that they have. Robinhood doesn't have all of that. So when this all happened, Robinhood lost a lot of money and they had to go to 5 different companies in order to get credit in order to keep them afloat. And a lot of people don't see that. So Citadel is one of these companies that it was backing them in order for them to IPO. So if it's in the best interest of one of their investors to do something and then they do that and it benefits them, then yes, there's market manipulation there that I see, but I don't work for the SEC. There's going to be an investigation. But the sad thing and the reality of it all is that even if the investigation comes out and they say Robinhood is guilty of this, what Robinhood is going to do is have to pay $1 billion fine. That fine is not going to go to the investors. That fine is going to go to the SEC. And guess who's going to bail them out? Citadel will just give them $1 billion and say, hey, you guys take this $1 billion. And that's the way it works. It happens with Goldman Sachs, which is one of the companies that Matt doesn't really like to affiliate himself with because they manipulate a lot. But
I don't like none of them. I don't even like my mom's. I don't even. Let me just make that clear. I don't even like my mama's hedge fund. I don't trust any of them because they don't care about me and you, right? They'll take your pension, they'll take your 401k, and they'll make money. If they don't lose it, great. It doesn't hurt you. But if they lose it, oh well, you're lost. I'll get my bailout from the government. I'll start all over. But that's just your loss. Yeah, people didn't get their 401ks bailed out, but JP Morgan, Goldman Sachs, they all did during the subprime crisis. They got bailed out. Your 401k didn't. It took time to come back.
I wanted to ask you a question because you said you earlier you said something about that there's some stuff that the feds can't bail out, right? And you just kind of like touched over it, but I wanted to just like pick your brain on what exactly you meant by that.
So let me just start from the top by saying, pretend that I'm a liar and always do your own research. Type that into Google, see what you find. But specifically the bond market, right? Nobody is going. Think about it like a person. You're not going to invest. You're not going to give me money, and I have credit card debt out the wazoo, right? So, and that's the bond market. That's like you loaning your loans and your income versus your loan, your debt to income ratio. Corporate bonds, if those things balloon, and what the government is currently trying to do, man, I'll get into it real quickly. They're trying to suppress interest rates so they could create an environment to seem like everything is safe. But really and truly, the interest rate isn't what it seems, right? So you have the CPI, you have there are other, how can I say this, entities that try to track the real inflation. Look at the Chapwood Index, right? So they show you the cost of living in every city, and trust and believe me, it's a lot higher than 2%, right? Your COLA, your pension, what other medical benefits we get? Anything based off of inflation, the government pays for, right? But the government has an incentive to keep inflation low, so they don't have to pay more money to you when inflation rises. So they don't have to pay for X amount of things. So I don't want to create a conspiracy theory, or the government may know best, but I would just say, hey, Google that. Something the Fed cannot bail out. And you might see an article on the bond market. Take a look at it, read it. Look at the Chapwood Index, right? Like chapstick, Chapwood Index. Take a look at that. Take a look at the worlddebtclock.org. take a look at the Fed balance sheet. Look at the things they bought for 2020. The government owns a whole bunch of private entities all in 2020, right? So take a look at that. Just stocks are just the icing on the cake. There's a lot of things that go into it.
Yeah,
Carlos,
say something. Good evening, guys. Good evening. Rise and shine on the other side. How you doing, Matt? You hear me, Matt? I see you, brother. You want to, I mean, and then who's the other? Who's the other dude? I can't hear you.
that's Danilo and that's Carlos.
Not him, nigga. I know that. I'm talking about the other dude. The dude that was just here.
Hey, Jonathan, major respect for showing up today. Thank
Oh,
you.
for sure, brother. For sure. You already know. I gotta make it happen. I gotta show face, literally, and then I had to show up fashionably tardy. But listen, I have two questions for all of you guys. Anybody can answer. First off, the first off is, that I saw the CEO of and M1 Finance speaking yesterday, and he was talking to somebody saying that basically that by next week Robinhood could possibly go bankrupt. What do you guys think about that? That's one question. And the second one is, everybody's saying that due to all the situations that's going on right now, that and the fact that, since you guys are talking about unemployment, that every time that they keep giving everybody money in the states, the dollar keeps devaluing. It keeps losing its value. So everybody's saying to take their money out of the stocks and put it into like liquid assets. You know what I'm saying? So what do you think about that? That's what I want to know.
Jonathan, you're starting to get real dangerous. Watch out. You're starting to get real. I might have to call the FBI. You're starting to get real dangerous.
All right, so to answer your first question, can Robinhood go bankrupt? Yes. Will the people that are backing them and are going to make money out of their IPO allow them to? No, especially with what we've seen in the IPOs in the last year, not year to date, but the total last year. We've seen companies like Snowflake that were supposed to IPO at like 75 bucks. The day of IPO, they announced they were going to go for 120 bucks. And then when people found out that Warren Buffett had invested in them, that stock, it opened up at like 250 and it went all the way to like $375. Like that's just one IPO. You have Nikola that went from, doesn't even have a product. It went from $10 to $90 and then all the way back down to $20. So people are looking at these IPOs and saying, people are making money on the front end. And the way they make money is that when people invest in it, it's called venture capitalism. When they invest in it before it goes, and Carlos knows about this because he invested in Polkadot before Polkadot was a big thing. And, so he's done some of this stuff. But the way they make money is like Warren Buffett, he didn't pay the IPO price, which was like $150 when it came up. He paid like $50 per share, $65 per share, and he put in like $10 million into that IPO. So before it even IPO'd, he already had more than doubled his money. So that's how the venture capitalists make money. So Citadel, let's just say, this is speculation because I don't know how much money they've put in. I haven't read the details, but they're going to buy Robinhood for a certain price per share, and they're not going to pay that. By the time that comes out, a lot of people know Robinhood. A lot of people are in Robinhood, especially the retail investors. So what Citadel is thinking is, imagine retail loves Robinhood. So when this IPOs, that stock is going to fly up like every other stock does because people aren't really looking at the fundamentals. But can they go bankrupt? Yes. But do I think they will? No. Now, a lot of companies are going bankrupt. One of the members of the chat, he posted on there that CC's Pizza, a place I used to go to all the time, they're bankrupt. They declare for bankruptcy. So, it's possible. I think a lot of more companies are going to be declaring for bankruptcy throughout the next of this year, the remainder of this year. A lot of big companies have put into their fund for this year to merge or buy a lot of these companies that are going bankrupt. So be on the lookout for that. Um, what was your second question?
Thank you for elaborating in detail. First one. The second question was due to the situation that you were just elaborated on. Everybody's stating that due to that situation, everybody should take their money out of Robinhood, out of all these things and all these stocks, 4,000 stocks, and just go straight to the other thing.
So you when you originally said it, you said liquid asset. The
Yeah,
stock
that's
market
you know.
the stock market is supposed to be a liquid asset because you can sell and get your money back, but it's not really a liquid asset entirely because you're not going to get your money back exactly when you want it. As you saw, these restrictions were placed on individuals when they were trying to sell out of their AMC stock or out of their GameStop stock in order to make that big profit. And because, like I told you, the way the prices work, when Robinhood didn't allow you to sell anymore, what that does is it drops the price down automatically because the amount of people selling are not the same amount of people that are buying. So there was obviously more people trying to buy, and these people weren't allowed to sell. So their sell orders weren't even going through to be processed in order to bring that price down, or bring that price back up. So if
Yeah,
you're not,
pardon me, pardon the interruption. I must have made a mistake with that word with the liquid the word I used. But what I'm saying was, what I'm attempting to say is what the people are saying is the majority, like 90% of everybody who's investing right now, they're all saying the majority of the voice is saying that everybody should take their money out of there and go and invest in like metals and silvers and gold and things like that that don't depreciate. Even when all these things like major crashes have happened, they never devalue. So that's why they're saying that that's what people should do right now. So
and
that was for my second question.
Matt's been doing that since forever. He showed me how much gold he had, and he has like over $40,000 in gold. He's like very heavily invested in that. However, um, like when in March when the market crashed, gold fell as well. Gold fell down a lot. Cryptocurrency, it fell down a lot. Uh, Cash is going down every single day. So what is really safe? Like what is really a safe asset? Even real estate, right now is a seller's market because prices are at an all-time high. But when that flips, because everything works in cycles, when that flips around, um, the prices of houses can plummet as well because not many people are trying to buy houses anymore. You know,
I just want to ask a quick question. Um, so when the U.S. market crashes, do you think China is selling their gold? Do you think Russia is selling their gold? Do you think India is selling their gold? Those are the major gold players. I always say Japan, but not really. Do you think they're getting rid of gold just because our market crashes?
well, to answer this question, what we saw was the opposite. What we saw since March all the way to now is that central banks all over the world have tried to get their hands on as much gold as they possibly can. So they're buying it at an alarming rate. To answer your question,
All right. I just think, I don't think I'm important at all. I'm just a little guy. Um,
you're not.
but what I do look at is I look at what the central banks are buying. I do look at what uh, the corporate banks are buying, um, and I don't listen. I think the market's gonna go up from here. We're still in an atmosphere of easy money. I listen. If somebody told me, "Hey, I'm investing in Tesla," hey, ride that train. Ride, and I'm not being facetious. Literally, ride that train. Just, just have a George-like approach to where you're slowly exiting. You're slowly um, realizing those gains, making it real. But no, continue to ride the equity market until you see signs of more until you see signs of lack of cooperation from the Fed. Me personally, I want to do it. I'd rather just have a hard asset, but I'm not. Listen, I don't think it's a bad strategy. It's just a little bit too risky for me. But money can be made in the market still, right, for the time being.
So just because he brought it up earlier, I'm going to show you usdebtclock.org. I'm going to show you what that looks like so you guys can see what he's trying to talk about. So can you guys see it? Thumbs up. Yeah. So basically, this is what it looks like. It keeps running, and you could take a look over here. We could look at the U.S. national debt, and you can see how it's rising and rising. How much debt per citizen there is, the debt per taxpayer. We could squeeze down here to the U.S. federal debt to GDP ratio, and there was at one point where economists said that if it ever rose over 70% or 80%, that we would be in a dangerous territory. But as you can see right now, we're our debt to GDP, gross domestic product, is now 130%. So every single day we're in the negative. No matter how much money we're making, we're in more debt than what we're making. And that's us as a nation. If you could see defense and war, we're over here at $720 billion in how much we're funding. Social Security on the rise, Medicare, Medicaid. This is how much interest we've paid. The interest per adult is $14,960. So where's the debt per? Let me see. Personal debt per citizen is at 62,000. Savings per family has risen. Is at 27,000. The last time I looked at this a few months ago, that was like at 8,000. So, that shows me people are either getting worried or, sentiment is less. They have nowhere to put it, maybe. But that's how much savings are per family. U.S. debt held by other countries. That's a dangerous one right there. Where 7 trillion of our debt is held by foreign countries. So imagine if they all try to collect right now at the same time. Just think about that. This is how much of our trade deficit is to China. So we're at 300 billion. This is the amount of U.S. millionaires. I know we keep saying a lot of millionaires have been made this year, but this number's gone down. I want you guys to know that this number was higher. This was 18,800,000 the last time I looked at it, and now it's 18,435,000 millionaires. So the amount of millionaires has actually decreased. So
Sir, can you please show me that credit and derivatives number is to your left? That should be the biggest. That one right there. That should be the biggest number.
So this is the derivatives we were talking about. As you can see, like the amount is 600 trillion in derivatives. So we talked about what derivatives were earlier, but that's just like not real money. This is how much fake money is in the system. The U.S. money supply is at an alarming rate as well. The liability per citizen, like if we all had to pay this right now, we'd all have to pay $448. I hope you guys been saving. The amount of food stamp recipients is at 45. So yeah, I just wanted you guys to see, take a look at that, because this is like not common knowledge this is not common knowledge to a lot of people. A lot of people don't take time to look at that. That's the usdebtclock.org. But there's also worldclock.org, where it just shows the debt of the entire world. But I think it's just interesting to look at, because you don't really get a full grasp of what's going on until you look at things like that. I'm not going to keep you guys too much longer. What do you guys, is there any certain things you guys want to talk about or get off your chest? Carlos, you good? Jonathan.
I was gonna say, this is something that I just want, because the questions that I gave you before are just things that are people talking about. But something that I just wonder about is like, ever since Biden is in presidents, is the president now. How has that affected the stock exchange, if it has?
It really hasn't affected it as a whole. The fact that he's the president, what it's going to affect is certain sectors of the market. So there's things that anytime Democratic president is in office, there are things that go up, and anytime that Republican is in office, there are things that go up. So it all depends on the cycle. So, for example, for a Democratic president, you got to look at the things that the Democrats push in their initiatives, things like healthcare, things like he's very, very huge on electrify, like going green. So we're supposed to be carbon neutral by 2035 and carbon free United States by 2050. So that's one of the big things that's been on the rise ever since people knew. The blue side is bigger on like the legalization of marijuana. So you'll see those stocks, they'll continue to rise up as more states and more states. Now that there's a Democratic Senate, a Democratic House, and a Democratic president, it's going to be easier to get these laws, these legislations passed. So you just have to look at what it is. Now, things that are not going to do as well during a Democratic president are going to be things such as defense, or things like that, where the Democrats are very anti-war, so they're going to not fund as much money into things like Raytheon. Um, there's a few other companies out there, a lot of other companies out there that are funded by the military in order to give us weapons or give us gear, give us things like that. So these companies are not going to do as well during the next 4 years, unless we get into a conflict, and then all that will change. Obviously, we'll have to go respond to this conflict, and whether it be China or Russia or whatever. If we do go into war, all the stocks of these companies do great during war because they're getting a lot more money than they're used to receiving. Does that make sense?
Yeah.
Can you please show the gentleman, I don't know if we have time, just real quickly, may you please show them an image of the U.S. bond market versus the U.S. equity market? If you type that into Google, it should pop up in images, and it should show you the size of one versus the other.
You say U.S. bonds versus what?
You could put corporate U.S. corporate bonds versus U.S. equities. It should be a like a, not a Venn diagram, but something along those lines, and then people could see. I just want them to see how big the bond market, just corporate bond market alone, how big it is. Go to images. It might be in images. Yeah. You scroll down. It should be like circles.
These?
No. Nah, scroll down. Yeah. Maybe if you put versus VS in there. Oh, you did. Damn, US equity. Or put US stocks. Maybe that'll pick up. Let me see.
The Fed didn't want you to see it.
I don't talk to them crazy because they could probably buy me. So I just keep my mouth shut.
All right. Any last comments? Any last thoughts?
Yeah, I got something.
What's up, Larry B?
So this USDebtClock.org. I know there's no right answer, but so we have the biggest national debt, but we have the biggest GDP. So is there like any way potentially to fix that where we're on the, we're in not so much debt? I know there's really no right answer, but we're in a lot of debt.
Yeah, and a lot of people don't really understand that, but there is ways to fix it. And we've kind of combated it a lot. We were not on a perfect path, but we were on a better path before the pandemic. But it's all you have to look at the macroeconomics of everything. So it's not just Starbucks is closed or gas stations are closed. You got to look at the macro, which means if this gas station is closed, they used to get refueled every 2 weeks, but now that refueler isn't driving there. So now there's less fuel that's leaving the place because there's a lot of places in the supply chain. So now the people that are making it, the frackers, um, they have to stop making it. So we stopped fracking. So nobody's using oil. So what needs to happen now is all those uh, barrels of oil need to be given away. They were literally giving away oil because it costs more to store it. The way they store it is they either pay for facilities or a lot of them use tankers. So they put these barrels on top of tankers and the tankers sit off the shore and they literally they used to before the pandemic it was like $20,000 a day that the people that hold those tankers so then when the pandemic hit, these tankers were charging like $50,000 a day in order to keep that fuel off of the exchange. So think about the debt. Now we make money from selling fuel to different countries. We make money from selling a lot of different materials to different countries, and all the supply chains got closed. So now a lot of the money that we would have made during that time, we weren't making. Add to that remember those sanctions were placed on China. China was one of our biggest purchasers of like stocks. For example, rice, corn, things like chicken, pigs. These are all things that were purchased heavily by China, but Trump imposed those sanctions, and now that's less money that was coming into the American market. Now that affects the farmers because the farmers sit on all this stuff. They don't have nowhere to put it, so they have to like give away some of their stuff. And
So hypothetically, what's the end game if we never fix
um,
it? Is it like
the
I
end
don't know?
game
Does it?
is not really an end game. You
He,
gotta
he
look
he's
at
asking a lot of the right questions.
yeah. You
I
gotta
like
look at
it.
the best thing that you can do is look at what's happened to other countries in similar positions. So Venezuela is one, Japan is one, and Japan they fell into a deep recession for over 30 years. Like they're just recovering from it now. Um, but the
Because
biggest
what I'm looking at is in year 2000. Sorry to cut you off. We were at 59% federal debt to GDP, and now we're almost tripled at 130. Like that's kind of scary if you really look at it.
yeah, it's and that's why I showed you guys because like there's another side of the country. Like there's another not country. There's
Mm.
another side to the story. So you got to look at the whole picture, not just look at the stock market because you'll be deceived and you'll be very upset when you're like, why did the stock market just crash? It makes no sense. No, it makes perfect sense if you're actually looking at the macro of everything. Um,
And then if you really look at these numbers and break them down, like you got state debt, debt per citizen, local, like this is crazy. I never
yeah,
looked at it from this perspective before.
yeah,
Um,
Credit
and
card debt, student loan debt, like wow.
I want to chime in and say, George is right. You kind of alluded to what the economist said, and we were able to blow past what the economist said. So it's not set in stone, right? There's no magic number of debt, but at some point, as debt compounds, it may go from being a non-issue to an issue, and it's compounding at a fast rate. But George is right. Like the economist said that, and look, we're still going. But the question is, what's the straw that can break the camel's back?
Right. Yeah, that's what I'm curious about because this
so
is
what say
it's pretty eye opening.
what saves us is that we are currently the reserve currency of the world. Like we are like a lot of people in different countries they speak English and like everything goes through us. We're the market of the world. But in the next like 15, 20 years, that's not going to be true anymore, just through numbers. Um, China, their population is growing at an alarming rate. They even had to stop themselves from growing because they forced with families to only be able to have one child because they were growing so fast. But as they continue to grow and grow just through natural evolution, their GDP is going to crush ours. By 2040, they'll be like the strongest economy in the world, and things might shift. By 2050 they might be the reserve currency of the world. So things like dynamic shift.
So another hypothetical question, real quick.
Yeah.
If someone came to you and said, like, the economy's gonna just crash and blah blah blah, what would you tell them to invest in to prepare for that?
There's again, there's no safe answer to that. All I could say is diversify as much as you can. There's not one specific thing that you can, because if when things hit the fan, like I know Matt is very high on gold, right? But let's say you wanted to leave the country. If you want to leave the country, you're either going to have to use money to pay people to ship your gold. And think about it, if things are hitting the fan and people are looking for gold, like you're going to pay somebody to send it. You might get to the other country and that company might be like, nope, we never sent it to you, sorry. you know and when you go to the airport, there's only a certain amount that you can bring with you. Like they don't let you just travel with a whole bunch of gold.
No funny, no funny business. That's the thing about gold. True story, not made up. This guy was fleeing from India, and he had a $250,000 gold necklace on, right? And you can't take anybody's jewelry. You know what I'm saying? You could melt it down, and I know it's extreme. I know it sounds like a very third world country story, if you will, but at the end of the day, it could take many forms. So if you that's an actual story. If you type that into Google, man fleeing India with $250,000 gold chain, hey, he made it right through. He said, this is not a monetary asset. This is my gold chain. And when he got to the States, he melted it down to whatever he had to melt it down to, an ingot, a bar. But yeah, it's not illegal to wear jewelry. Maybe I'm wrong, but not that I checked.
So Matt, I got a question for you because I'm new to this. So let's obviously you're heavily invested in gold. Let's say everything hits the fan and you got to cash in on that. How does that work actually?
Man, that's a tough question. So you can sell it. You can sell it to bullion dealers, the people you bought it from. A lot of it too is peer to peer. I haven't experienced that because I haven't sold any of mine, but I've heard of stories where you contact me and we go meet up somewhere and it's peer to peer. It's money. We're in the Western culture, we're so far removed from that, but it's money, and our money used to be backed by it. But you could go in the street, right? As long as bring your gun, bring your gun. But as long as you feel safe, I'm joking, by the way. But as long as you feel safe, you could trade it peer to peer. You could trade it peer to peer. Anonymously.
But I guess the question I'm asking is, so like you're investing in gold. Let's say, I don't know, everything is fan, you go to cash out, you actually go pick up the gold.
What you mean when I buy it?
Right. No, not when you buy it. Like, 'cause I know you're investing in it, but like, let's say, like when you sell stock, you cash it out, you get the money, it goes back into your bank account. But if you like, I don't know, if everything went to shit per se, and you were investing all this gold, and you had to actually cash out and get it, is that how it works?
So if I'm understanding your question correctly, and this, I know this sounds crazy, but if they do introduce a new currency, I'll be able to move my gold into that new currency, right?
I got
because whenever there's a currency exchange, sometimes they don't allow you to exchange your old dollars for new dollars, your old dollars for Fed coin, or they may, and it's be a fraction. I'm just looking at what they did in India, what they did in Venezuela, and that may never happen, but I just like options.
I got you.
All right. So what we did today, we had a conversation. We covered a lot of topics. This is a lot of great information. I plan on doing this often. Thank you, Larry. Thank you, Jonathan. Thank you, Carlos. Thank you, Matt, for all participating in the discussion. If you like things like this, or if you want to know more about gold, I did a video on gold versus Bitcoin. I'll post that right up here. Besides that, remember, invest in me and press that like button, invest in yourself, and smash that subscribe button. Until next time.